Listen to me very carefully. What I'm about to say might force you to look at the house you're living in very differently. That place you call home, the walls you're proud of, the mortgage statement you barely glance at each month. I'm not here to scare you for fun. I'm here because most people have no idea what they actually signed up for. I'm Kevin O'Leary, and I've spent over 40 years building wealth, losing wealth, making smart decisions, and making some incredibly stupid ones. I've made millions. I've lost millions. And trust me, losing money is a very effective teacher. Much better than any finance book, much more painful too. I learned these lessons the hard way, so you don't have to. Here's the uncomfortable truth. A 30-year mortgage is not a law of nature. It's not gravity. It's not something written in stone by the universe. It's a financial choice, and for most people, it's a very expensive one. You've been told it's normal. You've been told it's just how it works. Smile sign here, and congratulations, you're now committed for the next 3 decades. Sounds romantic, right? What if I told you that 30 years is optional? What if I told you that 5 to 7 years is not a fantasy, not a scam, not some late-night infomercial nonsense with a guy standing in front of a rented Lamborghini? It's real. It works. And this is the part people don't like. It's not for everyone. In fact, most people are going to hate what I'm about to say. Some of you are already getting uncomfortable. Good. That means you're paying attention. Because everything I'm about to share goes against what feels safe, familiar, and socially acceptable. It challenges the idea that comfort now is more important than freedom later. I'm not here to motivate you with fluffy quotes or tell you to believe in yourself. I don't do that. I deal in reality. Numbers, consequences, trade-offs. And the reality is this: the way most people handle their mortgage quietly steals decades of their financial life. If you stick with me for the next few minutes, you're going to see your mortgage for what it really is. Not a badge of adulthood, not a symbol of success, but a system that rewards banks handsomely and keeps you busy for a very long time. You might wish you'd never heard this, or it might change how you think forever. Either way, once you see it, you can't unsee it. Let's strip away the polite language for a moment and talk about what a mortgage really is. When you sign those papers, you're not just buying a house. You're buying a commitment that follows you for 30 years. 30 years. That's not a loan, that's a lifestyle contract. It decides where you can work, how much risk you can take, how long you stay stuck in situations you secretly hate. And most people don't realize this until they're already deep inside it. At the closing table, everything feels exciting. Smiles, handshakes, photos, keys in your hand. No one leans over and whispers, "By the way, this decision is going to quietly drain a massive portion of your future." They don't say that part. They just tell you the monthly payment. That's the trick. Focus on the monthly number and nobody asks about the total damage. So let me give you a very simple example. Nothing exotic, no extreme case, just something painfully normal. You buy a $400,000 house. You're responsible. You do what you're told. You put 20% down. That's $80,000 gone on day one. You finance the remaining $320,000 at 7% interest for 30 years. Your monthly payment comes out to about $2,100. Manageable, right? You can handle that. It's not much more than rent. So you sign. Now slow down here, because this is where reality punches you in the face. Over 30 years, that mortgage doesn't cost you $400,000. It costs you roughly $766,000. Let that sit for a second. You borrowed $320,000. You give back $766,000. The difference, $446,000. That is interest. That is the fee for borrowing the money. $446,000. Say it out loud. That's not a rounding error. That's not the cost of doing business. That is more than the amount you borrowed in the first place. You paid the bank almost $500,000 for the privilege of owing them money. If a stranger offered you that deal in a parking lot, you'd call security. But when a bank does it in a nice office with free coffee, we call it normal. Now here's where it really gets uncomfortable. That $446,000 is not imaginary money. It's not monopoly cash. It's your time, your energy, your stress. It's years of waking up early, staying late, saying no to opportunities because the mortgage needs to be fed every month. That money could have been your retirement. It could have paid for your kids' education. It could have bought you freedom options and sleep at night. Instead, it quietly disappears into interest payments while you're busy living your life. And most people never question it. They just assume this is adulthood. This is responsibility. This is what winners do. Meanwhile, the bank loves you. You're the perfect customer. Predictable. Reliable. 30 years of guaranteed obedience. If banks gave out loyalty awards, you'd be platinum. So I want you to ask yourself something honestly without lying to yourself. Fast forward 30 years, you're older, you're tired, you're looking back. When you realize you paid nearly $500,000 in interest for that house, are you going to say, "That was worth it"? Or are you going to wonder what your life might have looked like if you'd known there was another way? Because once you see this number, once you really understand what it represents, it's very hard to ignore. This isn't about math anymore. It's about regret. And regret is expensive. Now, let's get something straight, because this is where people usually get angry and start pointing fingers. The bank is not forcing you to do anything. I know that's uncomfortable to hear. It feels better to blame a big institution in a nice building with a logo and a receptionist, but the truth is simpler and a little colder. The bank didn't trap you. The bank didn't chase you down. The bank simply offered a deal, and most people accepted it without asking a single hard question. Banks don't need to pressure you. They don't need to yell. They don't need to lie. They just wait. They wait for your silence. They wait for your comfort. They wait for you to say, "This is just how it works." Silence is incredibly profitable. Here's the part that really makes people squirm. If you truly cannot afford to pay anything extra toward your mortgage, even a little, there's a strong chance you bought more house than you could realistically handle. I'm not saying that to insult you. I'm saying it because I've seen it hundreds of times. People stretch themselves to the absolute limit because they want the right neighborhood, the right kitchen, the right image. And then they spend the next 30 years defending a decision they can't reverse. Now, before you shut this off and say, "Easy for you to say," Kevin, let me be clear. I understand that life is expensive, groceries cost more, gas costs more, kids cost more, everything costs more. Not everyone can throw extra money at their mortgage tomorrow morning. That's reality, and pretending otherwise helps no one. But here's the distinction that matters. Not being able to do something today is very different from refusing to question it at all. Most people don't even want to look at the numbers. They don't want to confront the trade-off. They just want reassurance that everything is fine, that they made the normal choice, that everyone else is doing the same thing. Normal is comfortable. Normal is also how people stay stuck. This is where the real choice appears, and it's not a fun one. You can choose short-term comfort. You can keep your lifestyle exactly the way it is. The dinners out the upgrades, the quiet agreement not to rock the boat. There's nothing evil about that, but it comes with a price. And the price is time, flexibility, and options. Or you can choose long-term freedom. And freedom is inconvenient. It asks you to say no when everyone else says yes. It asks you to feel a little uncomfortable now so you don't feel trapped later. It asks you to admit that some decisions, even socially approved ones, might not serve you. This is the moment where people separate into two groups: those who are genuinely curious and willing to adjust course, and those who just wanted to hear that the system is unfair and none of this is their fault. I'm not here to judge either group. I'm here to wake you up. Because once you understand that this isn't about banks or rates or paperwork, but about choices and consequences, something changes. You stop feeling like a victim, and that's exactly when real options finally appear. Let me tell you why paying off your mortgage early isn't just a smart financial move, but one of the most powerful leverage points in an entire life. And no, this isn't about being obsessed with debt for the sake of it. This is about what happens when the biggest weight in your financial world suddenly disappears. First, let's talk about the obvious one, the thing everyone tries to downplay because it sounds boring: interest. When you pay off a mortgage fast, you don't save a little money. You save hundreds of thousands of dollars. Real money. Money you would have handed to the bank quietly, month after month, without applause, without thanks, without even noticing. When you cut a 30-year loan down to 5 or 7 years, you don't just shorten the timeline, you starve the interest. And interest is the bank's favorite food. Now, here's where life really starts to change. Once the mortgage is gone, the largest check you write every month simply vanishes. No more $2,000 disappearing before you even breathe. That alone feels like a raise you didn't have to ask for. Suddenly, your cash flow changes. Your stress level changes. Your decisions change. You stop budgeting like someone who's constantly bracing for impact. Then there's something people rarely calculate because it doesn't fit neatly into a spreadsheet: peace of mind. When your house is paid off, you can't be evicted by a bad quarter. You can't be foreclosed on because the economy sneezed. Layoffs hit differently when you own the roof over your head. Crashes feel different. Uncertainty feels different. You sleep differently. And no, that's not dramatic. That's reality. Here's another one most people don't see coming. Debt quietly limits your choices. It tells you which jobs you can't take, which risks you shouldn't try, which ideas you should ignore because the mortgage doesn't care about your dreams. When that debt is gone, something opens up. You can take a lower-paying job you actually enjoy. You can start a business without feeling like you're gambling your family's safety. You can step off paths you hate without panic setting in. That's not freedom on paper. That's freedom in real life. Now let's talk about wealth acceleration, because this is where people's eyes usually widen. If you were paying, say, $2,000 a month toward your mortgage and suddenly that obligation disappears in year 7 instead of year 30, that money doesn't vanish. It can be invested every single month for decades. If you take that same payment and invest it at a reasonable long-term return, you're not talking about small numbers. You're talking about millions over time. $2 million is not a fantasy. It's math. Boring, predictable, beautiful math. And here's the part I really want you to hear. This isn't just a money strategy. It's a life strategy. Paying off your mortgage early is about reclaiming time, energy, and optionality. It's about reducing the number of people and institutions that get to vote on how you live your life. It's about building a foundation so strong that everything else becomes easier. I know some people will say, "But Kevin, I could invest that money instead." Sometimes, yes. In specific situations, with discipline, with the right temperament. But most people don't do that. They spend it, and then they wonder why 30 years went by so fast. When your mortgage is gone, you don't feel rich in the flashy sense. You feel calm, you feel capable, you feel in control, and that feeling changes how you move through the world. This is why paying off your mortgage early isn't about deprivation. It's about leverage. You give up a few years of comfort to buy decades of freedom, and that trade every single time is worth serious consideration. Now we get practical because inspiration without execution is just entertainment. There is no magic trick here, no secret button you press, and suddenly your mortgage disappears. Anyone selling you that is lying. What actually works is a system, a boring, disciplined, repeatable system. And yes, it requires effort. That's why most people never do it. The first lever is simple and almost annoyingly effective: how often you pay. Most people make one payment a month and never think about it again. That's convenient. It's also expensive. When you switch to paying every 2 weeks, you're not doing anything dramatic. You're just splitting the same payment in half and sending it more often. But because there are 52 weeks in a year, you end up making the equivalent of one extra full payment annually. You don't feel like a hero. You don't feel rich. But quietly, relentlessly, your principal shrinks faster. And principal reduction is where the real fight is won. Now, that alone won't get you to 5 or 7 years. It helps, but it's not enough. The second lever is where things get uncomfortable, and also where results accelerate. Extra principal. Every dollar you put directly toward principal is a dollar that never collects interest again. That's powerful. On a typical mortgage, an extra $300 a month can shave more than a decade off the loan. That's not theory, that's math. $10 a day. Most people spend more than that without remembering what they bought. But we're not aiming for a little better. We're aiming for transformation. When you start talking about paying off a mortgage in 5 to 7 years, you're looking at $2,000, sometimes $3,000 a month in extra principal. And this is where people panic and say, "That's impossible." No, it's not impossible, it's uncomfortable. There's a difference. The money doesn't magically appear. You create it. You manufacture it. You stop pretending every expense is sacred. You don't cut everything blindly and live like a monk forever. You cut intentionally. You ask simple questions. Do I need this right now, or do I just like it? Is this helping me buy freedom, or is it helping me stay comfortable? Small leaks sink big ships, and most budgets are full of leaks. Then there's income. This is the part people love to complain about but rarely act on. If your main job barely covers your life, you don't wait 30 years and hope for raises. You add income, temporarily, evenings, weekends, skills you already have. No one is saying do this forever. This is a season, a focused sprint. 5 to 7 years of intensity to buy decades of relief. And here's what matters most. This is not about punishment. It's not about suffering for the sake of suffering. It's about choosing a hard path now so you don't stay trapped later. You don't cancel joy permanently. You delay it. You trade short-term convenience for long-term control. When people fail at this, it's usually not because the math didn't work. It's because they treated it casually. This requires intention, automation, rules you don't renegotiate every month. You pay your future first before lifestyle gets a vote. This is how a 30-year mortgage turns into 5 or 7. Not overnight, not magically, but predictably if you decide that freedom is worth more than comfort for a while. Let me leave you with a picture because this is where everything you've heard either fades away or sticks with you for a very long time. Picture yourself 30 years from now. You're older, maybe wiser, maybe more tired, and you're still sending a mortgage payment every month. Maybe smaller, maybe almost done, but still there. Still an obligation. Still a quiet voice in the background telling you what you can't do yet. You look back and realize how many decisions were shaped by that payment. Jobs you stayed in too long, risks you never took, time you never quite felt free to enjoy. And you tell yourself, well, at least this was normal. Normal is a very comforting word. It's also a very expensive one. Now picture a different future. 7 years from now, the mortgage is gone. Not almost gone. Gone. The house is yours. No letters, no deadlines, no anxiety when the economy shakes. You wake up knowing the biggest expense of your life is behind you. Your income belongs to you. Your time belongs to you. Your decisions are lighter. You don't feel rich in a flashy way. You feel unshakable, calm, in control. The difference between those two futures is not luck. It's not intelligence. It's not income. It's a choice made consistently when no one was clapping for you. A choice to trade comfort today for freedom tomorrow. Here's the truth most people never say out loud. Debt doesn't kill you all at once. It kills your options one by one. It doesn't scream. It whispers. It convinces you to wait, to delay, to settle. And then, one day, you look back and realize how much it decided for you. I'm not here to tell you what to do. I'm here to show you what's possible. Some of you will close this video and do nothing. That's fine. Others will sit quietly for a moment and realize they don't want the same future they've been drifting toward. If you're one of those people, you already know what to do next. Not because I told you, but because something clicked. Freedom doesn't arrive by accident. You choose it, and once you do, everything changes.